Hey everyone, happy Tuesday. We are going to be starting here kind of a new type of podcast. We have one of the Wall Street Titans, Dan Ives, coming on. Really excited about this. I know all of you guys are going to be really excited, especially since you all love learning about the market, but also how people got to where they are now, super successful. And so really a pleasure to bring Dan on. And without further ado, Dan, how are you doing today?
Yeah, great to be here. Thanks for having me.
Awesome, man. So before we get into any stocks, I think Dan's backstory is really interesting. And so for those of you who don't know, who might just know him from being on CNBC, he worked at HBO. And so Dan, how do you go from working on really like a streaming and movie type of platform to really taking it to becoming like a Wall Street tech titan kind of person?
No, and it's look, and I think ultimately, especially people like myself that have been on Wall Street now over 20 years, I think the background's key to really better understanding stocks and how industries work. And when I started, I came out of Penn State for undergrad, and I started working HBO corporate finance and really started to understand the way the cable industry worked in terms of the inner workings. And I think that was important because ultimately then I went to MBA school, University of Maryland, and then I started working in Wall Street in 99, at FBR, which ultimately got bought by B. Riley. And I've been doing tech, on the street really since. So, and I think all that experience, it gives you that sort of knowledge of just seeing how things have shifted. If you look back then, HBO, it was really focused on movies, boxing, streaming. Obviously, wasn't even really even a pipe dream or even a word. So it's fascinating, but also it shows just how quickly industries change. And it's something where I've always just sort of continuing to learn every day. And I think that's it's the beauty of covering tech stocks and EV and some of these industries that just continue to evolve.
Was there like a certain moment when you were at HBO that you kind of knew that, yeah, I really want to be on Wall Street?
Oh, I think part is I always had a passion for stocks, and this is going back even to high school. But like a lot of kids, you come out of college, it was hard to break into like investment banks. And it was something where corporate finance was an easier route, one that I was able to get into, right? And especially if you go back to like, that was mid-90s, 1996, the economy was not great. So jobs were even tougher to get. And of course, this is even pre real internet. So everything was sort of letters and trying to get into companies. But it was a passion for stocks. And ultimately, that's what really drove me to business school to get my MBA. And even ultimately, my first job at FBR, which I was there about 16 years. And I think because you need in this job, you need to be passionate about stocks.
For sure.
If you're not, because I think if you're not passionate, from a client perspective, you're just not gonna. Ultimately, I think you just it ultimately just hits a wall where you can only be so successful, and because the nature of the industry.
You would say and obviously you came into Wall Street kind of as the tech bubble started a little bit around 99, but you would say that if you're not really passionate, you're more so of, you don't necessarily care like what price the stock goes to. You want to be right because you love stocks. Would you say that's kind of how you view things?
Yeah. I think also like you can't fall in love with stocks because going back to 99 bubble and burst and seeing that all play out, I think that also taught me a really good lesson in a few ways. I think it taught me a lesson where you never could underestimate how bad the crash is. But then on the other hand, just how far these stocks could go. And ultimately, some of the secular winners. I mean, if you go back even to when the bubble burst, and let's say 2002, 2003, it was really viewed as like this is it. Like there will be technology names, but it's almost a value driven sort of industry. And really under the covers, so many of the companies that we talk about today, they were getting founded in 04, 05, 06, the venture capital industry that supported them. And that's why spending so much time, I'm out in New York, but spending so much time in the West Coast for all those years, you really start to better understand whether it's the tech industry or the EV industry, a lot of really the birth of so many of these companies. And I think it just gives you perspective from where we are today.
Yeah. So you really saw everything coming then from, a different perspective. Instead of just being on the East Coast where really it's just a transactional type of thing, you got to see Silicon Valley in work and really got to pick up on what trends are coming down the road. And I think that's kind of why you've kind of really built out this persona of, knowing a lot about tech and knowing what's really going to, be the future.
Well, and also it's like when stocks are going up and to the right, everyone could break their arm patting themselves on the back. But it's when things go bad, they go against your call. And our clients, which are hedge funds, mutual funds, you're like, that's been in those periods, that's been where we've earned our value. If I go back to 07 and going back into the financial crisis, if I look back at points in 2011, 2012 with some of, we had tech names that were missing once every 2 or 3 quarters. Cybersecurity, the cloud industry. Look at Microsoft. I mean, today, this is a stock that will probably be, north of $250. I'm going back to like when Nadella took over Microsoft and we were bullish and trying to tell everyone like he's going to change Microsoft doing a cloud behemoth. Many were trying to understand what type of alcohol you were drinking when you're making that call. Or, going back into like with Apple and being so passionate about iPhone, going back a decade, many people would look at you with the thought you had 2 heads when you were trying to make that thesis. But also, those are the winners. I mean, we've been dead wrong many times too. And I think ultimately you learn sometimes more from like your mistakes than sometimes when you're successful. At least for me, I mean, I could go back. There were times where in bull markets, we're downgrading stocks on valuation. And if I look back at some of those are secular winners that moved another 70, 80% higher. I think you also learn where valuation's important, but a lot of times like the market starts to re-rate stocks. It's no different when we saw with Tesla, right? It was recognizing years ago that Tesla was not an automotive company. It was a technology name, in terms of how we've always viewed it.
Yeah. So I guess it's a good segue into what Wedbush does. You obviously have extreme influence there. What goes into, I guess, creating a call for a stock at Wedbush, and for the listeners that don't know, and then also what kind of services does Wedbush provide to, I guess, hedge funds, mutual funds, that sort of thing?
Yeah, like a lot of investment banks. If you think about most investment banks, of course, there's the investment banking arm. But then when you look at equity research, the main purpose of an analyst is our clients, which are institutional mutual funds as well as hedge funds. Each of those have individuals which focus on sectors. And it's really, I cover broader technology, software, as well as disruptive technology. But what it's doing is, you're competing with 30, 40, 50 analysts on every name. And it's very easy to just go, sort of center of the fairway, call stocks, and maybe kind of go with consensus. And that's never been how we've gone about it. And at Wedbush, like our clients rely on us to get, to really ultimately pick stocks. I mean, that's like our goal at the end of the day is picking the winners and making money for our clients, as well as we have a ton of private client and retail. Wedbush is all around the United States, and it's hand holding those clients as well to sort of get through some of these markets and recognize the opportunities.
Yeah.
And that's always been our value. I mean, our value is to sometimes it's the diamonds in the rough, but other times it's if a stock's up 20-30%, do you stay with it? What's your valuation parameters? That's why a big part of what we do is modeling, but a lot of it is core heart research. I mean, I could go back to it's like a Tesla, sitting there trying to figure out, how many boats are coming into the port in Belgium. So a lot of the
how did you do that, Dan? How did you figure out how many were going into Belgium?
Yeah, I mean, look, like when we travel. I mean, I've probably traveled 2.5-3 million miles in my 20 years. Like, so we travel to Europe a few times a year. I spend a few days in Europe, basically visiting, Tesla dealers, trying to understand the logistics, trying to understand how many ships were coming in, because ultimately, like, that's not necessarily driving the stock, but it gives you a sense of what demand looks like. It's talking to Norwegian customers to understand, would you buy a Tesla over a European EV? So a lot of what we've done is like, it's core heart, like survey work. I mean, there's times instead of covering Apple, I'd sit outside myself and my team, sit outside Apple store for 8 hours talking to customers. Because I believe, as much as we talk about the stocks, it all comes down to understanding the fundamental drivers. And a lot of that is really rolling up the sleeves. I mean, I think that's at least always been our philosophy, whether it's software, whether it's electric vehicles, whether it's other types of technology trends.
That's incredible. I think that's a great segue into two calls that have, in my mind, that are really important that you've made. And one is Tesla, that you believe, and I saw you tweeted this out, it will be a $2 trillion company within the next 2 years. And Apple will be a $3 trillion company within the next, 1 year? How did you, like, I guess, was it the same philosophy going through and doing boots on the ground? Or I know for Tesla, obviously, like, delivery numbers are important. And then how many, like, obviously, like, new models are going to come out with the Cybertruck, and then with the Semi, we'll see what happens with that. But what kind of goes into making those types of really bold calls? Because you have been, especially with Tesla, and it's kind of been, you've become synonymous with Tesla in that you've been the one that's been right. You and Kathy Wood really are the ones, two people that have been right on it.
And she's unbelievable.
Yeah.
In terms of her calls and her foresight.
Of course, she's been fantastic. And I remember Tesla, it was back around $400, and she said it was going to go to $7,000 a share or something ridiculous like that. Well, she might have undershot it at that point. But what really?
Yeah. I mean, to your point, so let's even take Tesla as a good example, and then we'll hit on Apple. Well, first off, you might have a great slice of pizza, but would you pay $9 for it, or $3 or $4? So I think it's also trying to figure out what the value of these companies are. And my view of Tesla has really more from, I think there were 3 things that needed to happen where I think many investors sort of missed it as it was happening. One was what the scope of the EV landscape looks like. And I think starting, call it 3-4 years ago, started to realize, unless a meteor hit Earth, I mean, this was really going to be a $1 trillion industry. And from a battery perspective, and a lot of what we do is we talk to engineers and really boots on the ground across, US, China, Europe. It's really trying to understand the technology, like the differentiation. And more it started to realize, like, look, Tesla really owned this market. And these even going back 3-4 years ago, if Elon was able to get production to a point that they could really start to get over that mountain in terms of not just profitability, but from a demand perspective, that speaks to why 10 City was so important in Fremont. And I think once that happened and we started to do, very detailed modeling and all of our industry analysis, you start to realize, like, look, there's a 25% chance this doesn't work. 25% chance that this is a DeLorean situation, great vision, but they can't scale. But there was more than a 50% chance that this was not just going to be successful. It was really going to be a paradigm change. But the big thing was China. And we spent a lot of time in Asia and focusing really on the China market. And that, in my opinion, that's really the linchpin to the whole success of Tesla. I think that could be 40% of units in the next 2 to 3 years. But it's putting a value on it. And so it's doing that work, but it's putting the value, and it's trying to take investors through best case, we'll call it bull case, base case, worst case.
Yeah. How going back to China, how big of a threat is NIO to China? Because I know a lot of analysts have, obviously like upgraded NIO, and NIO's delivery numbers have been, pretty good. They've been beating it. Like, are they a real threat?
See, I've never viewed NIO as a threat. I've almost in some ways viewed NIO as actually a positive for Tesla, because they've helped further build out the EV vision. But yet, I mean, if you look at today, it's 4.5% of overall automobiles in China that are EV. We think that's going to 10% next, call it 2 to 3 years. Big enough ocean for more than one boat. And I think that's sort of our call. The call is like, NIO is a phenomenal company. I mean, so is XPeng and others.
Yeah.
And the battery technology and what they're doing. But when I look at Tesla, I mean, I think we could be looking at 2 to 250,000 units just in China alone because of Giga. Giga continues to be their core success. So I've never viewed it that it's mutually exclusive. It's them or NIO. I view Tesla as, continuing to sort of dominate that market, but NIO and the other Chinese players are going to continue to be successful. And our view is that NIO, of course, they're going to be going to Europe in a year and a half to 2 years. They'll be here in the U.S.
Do you really think, and we're kind of segueing from Tesla a little bit to NIO, do you really think that a company like NIO that's synonymous with China and because China's kind of like on the other side of the globe, when you think of like, you think US and then you think Europe, do you think a Chinese car company like NIO would be successful in Europe or even in the US if they decided to come here?
I think, well, first of all, and we're deviating a little bit, but it's important. A Biden administration is massively bullish for EV.
Yeah.
And that's not just for US EV in terms of GM, Ford, Tesla, call it Rivian, Fisker. It's bullish. I think more and more international EV players start to come here, and ultimately that's going to be some of the tax incentives, and they start to build some factories and build out.
Yeah.
Now, do I think it's contained success? Yeah, that's possible. But I do believe NIO is, has a bit of a cult-like following, and I believe they'll be successful in Europe. And I think in the US, they could have contained success. See, our view is the EV industry, Tesla's not going to have the market leadership they have today, of course, could go down, let's say 1,000 to 2,000 bips over the next 3, 5, 8 years.
Yeah.
But the market could be a 5, 6x from where it is today. So if that happens, it's not just Tesla. You're going to have many other successful players in EV. But our view is that NIO will be successful, but it's contained success. The thing that Tesla has that's so unique, it's not just the technology, the Musk factor, it's the brand. And that's something that they've built. Similar to what Apple's built on, when you look at iPhone and the whole ecosystem.
So, I feel like there's a lot of similarities then between EV and how streaming, your background from HBO, where Netflix became the predominant streaming player. And even though you have Disney Plus, you have, all these other different types of platforms that have come out, Netflix still, as you saw in their last earnings, they still crush it. And so I feel like those two markets are very similar. And you're obviously going to see players like GM obviously has been doing really well. Ford's trying to get in with the Bronco and with other types of automobiles. So there will be competition, but I kind of agree. Tesla is the Netflix in that space.
When I'll go back to, I'll hit on Apple a bit, but if you go back to Apple, I could go back to periods 08, 09, iPhone comes down to 07. There were periods where everyone's like, BlackBerry's going to kill Apple, like the brand's there, but it's more on the Mac. There's competition across the board, but it was brand. It's no different than like what Netflix has done in streaming, what Tesla's done in EV, and that's what Apple's obviously built as well. And when you go to some of these other mediums, it's no different than what Uber built in rideshare.
Yeah.
And I think that sometimes, like going back to the Apple, you asked a question before. Our view on Apple, similar as Tesla in some ways, was the view is that it's not just the iPhone ecosystem, it's the services business.
Yeah.
So what's the value of the services business? We always argue the value of the services business, could have been upwards of $1 trillion. The market was assigning a value that it was worth $50 billion. A big part of the re-rating in Apple has been the market recognizing that the services business should start to get that multiple. It should command that multiple. You go back to Apple for so many years, you bought it at 12 times PE, you sold it at 16 times into cycles. Now someone will be like, oh, it's so expensive, it's so stretched. But it's apples to oranges. It goes back to what we were talking about. It's a sum of the parts. That's how you have to view Apple. And I think it's important for anyone listening, when you're looking at different stocks, sometimes where, I feel like where we've added value, or sometimes it's trying to figure out pieces of the business that maybe you believe, and you have good reason, you have fundamental reasons, that the market is undervaluing that business, or maybe if you're bearish, overvaluing it. And it's trying to kind of build that case. And I think that's an important investment philosophy, especially in this market.
For sure. For the listeners out there, Dan actually does have his own ETF. It's called the Ives ETF. Is that kind of how you think of what entities or, assets to put into that ETF, how you're going about valuing stocks? Is that kind of what goes into that?
Yeah, and that ETF, that's something that we did with our partners, ETF MG and Wedbush. And really the vision there was like, if you go back, 2 years ago, I'm hugely bullish on cloud computing. I believe it's one of the most transformational growth trends in the last 30 years. And it was really a vision that to put an ETF together that would give retail, that would give investors the opportunity to invest in something that wasn't just large cap tech names that focus on cloud. It was this mid-cap infrastructure platform. Think about it, really the hearts and lungs of the cloud ecosystem. But it was building out an international portfolio, especially with so much of the growth coming from Asia. So that was the vision. Felt like we could really be differentiated and giving investors a really good opportunity in terms of building out that cloud portfolio. And that's what we've done. And yeah, we've been real, it's an interesting time, because especially where we are in cloud, of course, COVID's accelerated the cloud shift. And if you look at that ETF, and I think what a lot of other investors are looking for is, how do you play this growth frontier that's happening in the cloud?
You did
whether
call
it's
it
enterprise or whether it's streaming.
Yeah, you did recently say on CNBC it's a cloud arms race going on right now. And that was in reference to the IBM and Intel earnings report, when both showed that they were kind of falling behind, especially after IBM acquired Red Hat a few quarters ago.
But it's a great example. If you go back 5 years ago, look at where let's say Intel. Intel was top of the world. AMD, if you go back, for many years, single-digit stocks. And then you look at IBM, they own enterprise. It's really the origins of enterprise. But it shows that they're late to the game on cloud. Potentially, did they bet on the wrong horse with Red Hat? You look at Intel, totally misjudged AMD, NVIDIA, where everything was going in terms of AI. And now both IBM and Intel, they find themselves in the wrong end of the spectrum. Look at Microsoft's earnings in terms of cloud. I mean, those are Mahomes likes numbers. So that's why I think it's a very, very interesting time in technology and just as an investor. I mean, I think when you see individual retail investors, of course, now everything going on with, we see short covering and GameStop. But I think when you take away the noise, just forget some of the situations, you're seeing more and more investors, individual, just interested in the stock market, interested in stocks. And I think that's healthy for the market. And I think it's something where, especially with so many of the trends going on, it's a lot of opportunities. To maybe find some names if they're mispriced. But it goes back to what we were saying. Like, it's building that confidence as an individual to what I do 20 years later. If you have that confidence as an individual, then ultimately, like, if that's going to be your job, then that's something that you could pursue.
Going back to your experience, would you then say it's like for someone that's brand new to investing, and we actually have a lot of listeners that, are newer into the investing game, they start, throwing money into it now. Would you say like valuations matter so much anymore? Because, you look at Intel and you look at IBM compared to other software, cloud names like Snowflake, let's just say as an example, they trade significantly cheaper than those ones. So do you think like valuation necessarily matters too much in terms of where tech's going? Or do you kind of have to look, 5-10 years down the road where it will be?
Yeah, no, it's a great question. I mean, look, valuation always matters because at the end of the day, it just goes back to like a bottle of water. Are you going to pay $8? Are you going to pay $2? Like, everything has a value. But, I think when you look at some of these names, like you talk like an IBM or an Intel versus a Snowflake or Palantir or C3 AI or some of the others, I think investors, they're having a tough time trying to value these names because it's like you're looking at some of these trends. You almost have to look out 4 or 5 years.
Yeah.
Okay, what if everything goes perfect? What's the DCF? What's the growth? What does it look like? And I'm going to put a value on that. Now, the double-edged sword is that's based on if everything goes perfect. You miss a quarter, you have a strategic execution issue, competition comes in, then all of a sudden, just like I said, like you can never underestimate how long the rally goes and how high the stocks go. But on the other hand, as someone that's seen it front and center, you never could underestimate the pain and the level of pain when they crash. I still remember like 2000, like when that bubble burst, like in like March 2000. I mean, there'd be weekends like, my wife I've been with, since college. I mean, I'd be looking at my stocks, be looking at my portfolio.
You'd see all the red.
Just bloody red across the board. But as painful as that was, it teaches you lessons. And I think it does build intestinal it builds fortitude, right? And I think that's important because the market, like, look, it doesn't go up forever. But when you have those disconnects, it's trying to figure out how do you take advantage. I mean, I'll just go back to like this March, when everything happens with COVID, shutdown happens, markets getting crushed, March, April, like every day we're putting out COVID playbook, stress tested models, best case, worst case. This is where, see, it goes back to like our value is in times like that when everything's going right. Everyone could be a hero, but I find the most interesting part of this job, it's almost navigating when things go wrong.
Yeah.
When Tesla misses a production number, when they think it's going to go bankrupt. And I'll tell you the other thing is like, when you're wrong and you've made calls, like you also have to own it. And you're going to take a lot of criticism from your clients that have lost money internally,
Yeah.
from your sales force. But if you stick with it and you believe in it and you've done the work, when you come out on the other side, that reward, it's more than monetary. That's
How,
one that you go to bed at night and you feel like you've done a good job.
what going back to your story in 1999 when when you would look at
Yeah.
all the red on your I wouldn't be really a phone at that point. It'd be on whatever you would look at.
Yeah, it was like on a Bloomberg. Yeah.
But what made you say, this isn't for me? You know, I'm gonna go back to the movie business, because I feel like a lot of people, and we might see this, and you know, we'll get into GameStop later. We might see some of these stocks again. You know, it's fun on the ride up, but it can come crashing down,
Of course.
and they're gonna run into that same scenario. So like, what
And
kind of
and
makes
many, yeah, and to your point, like I'd say like 85 to 90% of the people that I knew in the industry then are probably not in the industry today, right? I mean, just because that flushed so many people out, or they just wanted, maybe they just wanted to go work at a company or go into corporate or whatever it may be. And I think that was that was like one of those fork in the road situations. Then go back to like 07, 08, right? I mean, that was something where jobs getting lost across the board, stocks are getting annihilated. You're trying to understand what the financial system would ultimately look like. And but if you survive periods like that, I think ultimately it teaches you lessons that you're able to take for many years. And I mean, I remember like going back to that crash, like 99, 2000. I work with a gentleman who is very well known at the time. Unfortunately, he's passed away, but he was like in his 70s at that point. So like he was someone that he knew technology names in the 70s and 80s. And I remember when that crash was going on, he was probably one of the most insightful minds. The reason, because he's been through crashes. He went through 87.
Yeah.
Black Monday. So I believe like when you navigate those, it gives you a different perspective in markets. I think, and ultimately, I think that's a value that you bring to clients.
I actually have a great story. So you brought up this past March. I was actually watching CNBC, and I saw Brad Gilbert, famous tennis player, loved tennis. He came on, he came on, and it was the same day or maybe the day before the market completely flushed. I can't remember the exact day in March. And he said that he was going to, he thought the Dow was going to go to 12,000. And at that point, the Dow had just hit like 19,000 or whatnot. I'm like, oh man, you know, if it goes to 12,000, we're going to see a lot of, you know, people flushed out. That turned out to be perhaps the best buying opportunity we're going to see in a really long time. And to go back to what you said, it's what teaches you how to, you know, value stocks when you have the opportunity.
I mean, I remember going back to like 08 financial crisis. I mean, there were points. I mean, to me, that was the scare. Like, see, it's a good example. Like in a COVID situation in the pandemic, as frightening and white knuckles as what from a stock market, of course, you know, in life so much more. But by going through 99, 2000, and by going through 07, 08, you were almost ready, armed and ready to go through from a stock perspective.
Oh.
Yeah, and I think ultimately years from now, whenever that is, I think it equips you better to navigate stress test models and figure out, okay, how low can this go? What do I own? You know,
obviously it's kind of looking a little bit in the past, but before, you know, obviously March hit when the market crashed, how big of an impact did you think the virus COVID was actually going to be on the market. Because I remember, me and my friends, we kind of played it off because we'd been invested in the stock market for a while. We kind of played it off. We saw what was happening in China. We were like, oh, stuff like this happens, swine flu, whatnot. And then it goes away after a while. How big of a, impact did you think this was going to be?
Well, I was in Asia for 2 weeks in late January last year when everything's happening. So kind of front and center, I started to realize, like, traveling around, whatever, 7, 8 different countries, I'm like, this thing feels different. But then it was type of thing, like, I come home, when I go into February, and the market was kind of shaking it off. And then it started, but look, you started like going into March, okay, this is contained. And then ultimately, of course, once everything got shut down, I mean, no one was ready for that. And I guess there's 2 parts. There's, no one could have expected what happened to the stocks on the downside. But on the other hand, in terms of like stress testing and almost the reverse, how quickly this accelerated when you think about enterprises, cloud adoption. And it almost, in some ways, a really accelerated technology growth by like 2 to 3 years, because everyone had to rely on the likes of Zoom and cloud and and everything else.
You were back in Asia. How was it like there? Like, you have a rare insight into what it was like to be really in the epicenter of where everything was happening.
Yeah, I mean, I remember I must have spent like 4 or 5 days. I was there over a weekend for a while, and I was in Jakarta. And Jakarta, I'm like just walking around, staying at the hotel. Like, everything seemed kind of fine. Like, maybe, obviously you're watching TV and you're seeing a lot of people in masks. And then over the course of the next few weeks, like across like Thailand and Hong Kong, and especially in Vietnam, you started to realize, like, whoa, this thing feels bigger. But ultimately it was one where it's, it was something like when I came back, and it seemed kind of like life is normal, right? Nothing was really changing. But I think, look, it's one of those things where it also teaches you too, in terms of like something like a pandemic, just how quickly the market adapts. And ultimately, this has, I think, been it's been obviously a once in 100-year pandemic. But I also think, from a stock perspective, everyone's trying to figure out, okay, when you get to some sort of normal, herd immunity, vaccines start to deploy, like, what does that mean for this market? Like, does that mean like valuations are going to go back to?
Do you think we're going to see that? Do you think we're going to see that back to normal in Q3 of this year, Q4 of this year, or do you think it's just going to be 2022?
No, I think somewhere in that August, September timeframe, I think things start to. I think you start to see some sort of normalization. Just based on like vaccine rollouts and return to work, and of course not totally normal, but then I think you'll see a moderation across the board of like front office applications, Zoom, Slacks, everything that everyone's doing today. But it's gonna. I think it's also going to take time to get back to how it was, quote unquote, before.
Do you think Zoom, I mean, kind of in the cloud space, I guess, do you think Zoom is, a company that really is, when everything goes back to normal, is going to kind of feel a little bit of a pullback? Or do you think it's kind of peaked? Because it's really hard in my head to internalize how much demand they've actually pulled forward, because I think as you continue to get back to normal, I feel like people will want to go into their office space, because now they've just been stuck at home, working, and it's become one contained area.
Yeah, and we estimate 35 to 40% of workers will still be some form of remote, even on the other side of this. And I think that's why Zoom, like, they'll have significant moderation of growth. But I mean, when you look at Zoom and Slack, look, it speaks like wide Salesforce by Slack. Like Salesforce does not buy Slack if COVID doesn't happen.
That's true.
And I think no, but that's also why when you look at like Microsoft's cloud numbers that were just off the charts, it just shows enterprises across the board, they are moving to the cloud because this has been a wake-up call for infrastructure across the board. And I think that's another thing that we're seeing is that, but look, you look at like ride sharing names like Uber and Lyft. Go back in the pandemic, you have Uber and Lyft trading. I mean, they both double from the lows, but that was when we're like, okay, like the ride sharing space is over.
Yeah.
But look what's happened. Like Uber, food delivery actually became like a huge asset, right? In
Kind of
terms
saved
of
their business a little bit during.
it did.
Yeah.
It did. It did. If they, it's funny, before COVID, I'd say like food delivery was like a $10 to $12 negative overhang in the stock. And then ultimately, if you really think about it, food delivery is what's not just saved the company, it's a huge part of really the value now in terms of that, kind of two-head monster.
That's incredible. And then you look at another, sharing type of company, Airbnb, they're going to be one of the big beneficiaries when this ends, you would assume. And that's what's gotten into their stock price, shooting
and
up.
that's what you're seeing in this new world of SPACs and your reverse mergers and everything else. It's, in some ways it has like even the playing field, but you have so many of these companies now that like you're talking about a whole new age for e-commerce, for EV. I mean, think about like an EV is like supply chain. Like if you look at Quantum and some of these other, EV battery plays, right? Like it's one because like if you think about what's happened in the US and China, I mean, there's almost an arms race on EV. But the biggest issue there is like, where is most of the raw materials coming from? China. And that's why ultimately, I think when you look at this from a political perspective, a Biden administration and a blue Senate with a very slim majority, I mean, including VP, it's kind of a Goldilocks-ish backdrop for stocks. And I think that's just an important dynamic, despite all the chaos the last few weeks in terms of just the political environment.
So you're basically saying that you think we're going to get potentially more stimulus, not just, in terms of individuals receiving stimulus checks, but businesses being able to continue to finance their, business on virtually no interest.
Well, it's stimulus, but also think about Biden in terms of EVs. I mean, I think single-handedly, like you're talking about something like, you're going to see like tax credits return likely to Tesla and GM, potentially doubling down on tax credits, tax incentives for building on EV factories. I think more and more you talk about like creating 1 million jobs. A lot of that's going to be done through EVs. And that's why when I talk about foreign, like I think we sit here, like I told you, I think we sit here a year and a half from now, and like you'll see a Neo on the street. But the reason that is that I believe a big part of what's happening is that there's a recognition that EV could be a massive industry from a job creation perspective, as well as of course from a green platform, and that's why it's a big part. I mean, look what EV stocks have done since Biden got nominated to be president.
I mean, what do you feel about stocks in the EV space, specifically like QuantumScape? I know they backed by Bill Gates and Volkswagen. They obviously have, quote unquote, best battery.
State.
Yeah. So like, what do you make of not just those types of stocks, but also like SPACs in the EV space that have just really, they double immediately after they debut? Like, what do you make of that? Is that kind of,
like
bubble
froth.
in essence? Yeah,
of course. Look, I mean, there's froth on some of these, and there's going to be some that disappear, and there's going to be others that are massive success stories. And I think it's, as an investor, is trying to figure out which are the right ones to play. I mean, like when you look at quantum as a good example, like look, solid state battery, if you look what they're doing in terms of like metallic lithium, like if they could take that to scale, it changes the industry. Now, if they're not successful, then the stock's massively overvalued and everything else. But I think even like on the SPAC side, it's one like, look, we cover Nikola. Like Nikola is one where like a great vision around hydrogen technology,
Mm-hmm.
and in terms of where they're going. But look at, everything that they've encountered, and
Yeah.
some of the hurdles they've had. And of course, stocks reflected some of that. So I'm just saying, like, I think as an investor, you always have to have like a glass half empty view, and let the company, whether as an individual investor, institutional, or as an analyst, let the company and your work convince you otherwise.
What do you think of Nikola? Because Nikola's it was a really hot stock for a while. Investors loved it.
Yep.
I think it shot up to like 80 something, maybe $90 at one point. Now, Trevor Milton's gone. Really the visionary behind the company. And I believe their partnership with GM, it might be either terminated
Scale
or
down,
what
scale
do
down.
what do you kind of make of that type of a story? Is there like still a story there?
Look, there's still a story there. I think Mark and Kim Brady, the Imagine team now, they've taken a lot of hype out of the story, which is good. Like, the Badger's not going to get built likely. GM, no ownership, they scale it down. The Trevor situation continues to be an overhang in the stock, but there's a vision, there's a prototype. Like if they could take hydrogen to the next level, especially on the semi, I mean, it could be a massive opportunity, but it's about executing.
Yeah.
The problem with a lot of these companies, they're pre-revenue. So like, and quantum as well.
Yep.
I mean, pre-revenue. So like, as an investor, like when you're betting on pre-revenue companies, it's tough. Like you have to have a lot of confidence that they're going to be successful. Look, Tesla, someone could think it's worth $2,000 or $2. The valuation is all in the eye of the beholder.
Mm-hmm.
But every quarter, they're reporting delivery numbers, and they have and then, me and you could disagree, but like everyone has what their value they're going to assign. When companies are pre-revenue, it's a slippery slope, right? Like, and it goes back to like, because some of these valuations, the street is basically saying if everything goes perfect, here's where the stock should trade. But what happens, we saw with Nikola, when something doesn't go perfect? And the nature is like when you're talking, like Microsoft since 1979, they've had a lot more successes than failures to get what, but they've had a lot of failures as well. Mm-hmm. Like I'm just saying, like when you go through those, it's especially when some of these stocks have had massive runs, you see the other side of that with the pain trade.
Yeah. How do, and this is a question a lot of people ask me, how do a lot of, when they see a new rating on a stock or when an analyst comes out with a new call, they either upgrade the stock or they downgrade the stock. How do some people, and you can use Tesla as a, testing case right there. How do some people have, a $2,000 price target and some people have like a $5 price target? People are, sometimes very confused on how that's possible because everyone's rating the same company.
Mm-hmm. But look, some analysts could view it as an auto company. That's where it should trade. Others, disruptive technology. Others view it that China could be, like our view, like 40% of units. Some others that maybe are more like negative on China, or whether it's geopolitical or domestic players, that like, no, Tesla's not going to be successful in China. But ultimately, and I think that's why, like, on that name in particular, because it's such an emotional bull bear story, you get like such variances in terms of what it's worth. But that's why I think it does add to confusion on a name like that. And then like anything else, like sometimes you get like chasing stocks that happen sometimes. And I think as an individual, it's just trying to like tune out the noise, do your own work, find the individual, him or her analyst that you maybe value more than the other, and trying to take their opinions. And that's why, like, I mean, analysts, like our clients, like they'll talk to me, and then they'll talk to a few other analysts on every stock. And I think with stocks, like, it's always important to talk to the bears and understand the bear story. So like sometimes like some of the smartest people I talk to on names are the bears, because you need to learn, you need to understand both sides. I think the danger zone is when everything's just, let's say you're bullish, rah, rah, rah. All you want to hear, you tune out all the negative noise, it's only positives. I think a big part of my success has been like understanding like you're human, you could be wrong, listen to other sides of the story, like understand those sides. Because there's times like, I mean, I'll give you a good example. Like there was a time like this, like 15 years ago, like there was a company we're like so negative on, and we go to the user conference, it's a software company, and every user I talked to, this company had their issues, but they were talking about like this new product cycle. This is super excited. It could really be a big deal. And we ultimately, like after talking to all came back and realized, you know what?
It's not.
Like you can't be negative anymore. Like because and we upgraded the stock. But so I'm just saying, like, sometimes it's very easy when you get too emotionally tied to your calls. I think that's a danger zone sometimes. And also it's like it's also knowing when to take money off the table and trim and you can own some more. I think, it's a danger zone when you get too emotionally invested.
Yeah. Taking money off the table is a great way into something I really wanted to touch base with you on, because over the last week, and this, GameStop, a lot of people have made a lot of money over the last few days on it. A lot of people have lost a lot of money on it too that have been shorting it. What do you feel like is really going on? Because it's not just GameStop. You have like AMC that's like up 37% in the after hours. You got a lot of these heavily shorted stocks that are just taking off. What do you feel like is causing this type of action?
Well, I think it's a great topic, because I think as someone that's been in this game for 20 plus years, like for most of my career, this was an institutional stock market. In other words, it was one where, of course, you have individual it's a big part of ownership, but institutionally, that was really ones that dominated the stock market, right? And to some extent, still, of course, like just from an ownership perspective. But now with the Reddit and Twitter and social media, Robinhood, the individual investors, it's no longer just a contained group on chat boards. It's real money. It's, in a lot of times, sophisticated investors. And it's a dynamic of the market that this is a I think a market force that's going to be here from now on. And I think it's important to understand, just forget some of the moves, but it's important to understand what it represents. It's another major player in the market. And I think you got to listen and understand views from those channels as well, to understand sometimes what's driving stocks. Now, of course, every stock has a fundamental value, but I think what this also just shows is just how more and more influential the Robin Hood world is getting.
You're clearly ready for it, but do you feel like Wall Street is ready for really Robinhood? Because it's been
Yeah.
around now for a while, but you always still feel like there's a shock factor when you see something going on with it.
Yeah, I think this last week, I think that there's many like myself that have already embraced it. Like, because I ultimately I hear all the time from individual investors every day on memes, and ultimately I learn things in terms of individual stocks or just send. But I think this has been a bit of a wake up call to broader Wall Street in terms of what you've seen. And I think it's a factor where you can't just dismiss it. It's something that's important in terms of the broader market. And when you have some of these moves, I mean, these are it's an important dynamic that I think is just going to play more
Yeah.
and more of a role, as we go forward.
It's also very important that you have, more people that want to participate in the market. I think, going back to the pandemic, one major thing that came out of it was you have a lot of people that before didn't really care less about the stock market because they would be doing
Yeah,
other stuff.
I agree.
They now have found fascination with it and they become active participants in it, which I think is really good because you don't have a certain individual that is contributing to it. Now you have more so of a diversified pool that wasn't in it before.
Well, especially younger and younger, I think it's important that if you're in I'm just gonna like junior high school or high school, like it's important to start to build that knowledge of stocks. Like a lot of times, I'll hear from kids that are, in college, graduate school. I mean, super smart, some of the brightest people I've ever spoke to. But yet, when you talk about stocks, they don't live that world. But yet they want to get into this world. And that's the one thing I'd say is that, a lot of times you talk about diplomas and all the other, letters you could have after your name. But I think getting into stocks early, like when you're younger, building that knowledge, building that history, investing, even if it's a small sum, some of your money, some of your hard-earned wages. I think it's important. I think it teaches because you understand, you build that over years. You pay a lot more attention to a stock when you have your personal money in it. And Robinhood and everything else. I think it's a great thing. I think it's great, especially younger and younger people, to better understand, what's driving market forces, everything else.
For sure, for sure. Okay, Dan, couple last questions here as we go on. People ask me all the time, and obviously you're someone that's perfect to actually relay this type of question to. You bring up someone that's, in school, they want to get onto Wall Street. They want to, they see you on CNBC. They want to be someone like that. How would you tell them to go about that? Obviously, you say you have to live, the stocks, but what kind of advice would you give someone that wants to really, take that path?
Yeah, I think, well, first off, I think it has to be natural. I've seen many people that say they want to get into the industry, and all of a sudden when they're doing models at 2 a.m. and it's been a 90-hour week, and they're like, maybe I don't like the industry. So the point is, first off, it's understanding. There's a lot of hard work and there's a lot of time that goes behind the scenes where you have to have the passion. And I think that's for anything, regard if it's a doctor, a profession, or developer, or whatever it may be. But I do think it's not just all the academic and working hard and everything that in terms of college and everything that comes with it. But I think it's having a passion for stocks and starting to whether it's investing your own money or sort of pseudo portfolios, because I think it sort of trains you, if this is something you want to do. And that's also why, like, I think like internships as much as you can are important. Cause I've probably had 25, 30 interns over the years. And there's times like I'll have an intern and they think they want to do this. And at the end of the summer, they're like,
They really don't.
thank you. This was such a great summer. But I realized I don't want to do this. So I think those things are important in terms of just like from a career perspective, because it's trying to understand like anything else, like, do you have a passion for it? Because like I think this is one of those industries, like if you don't have a passion for it, then you don't last long.
Yeah, that's great advice. I think, also that's what separates people like yourself that have really made a name for themselves on Wall Street versus individuals that, just go in and you don't really get to hear from them as much. And so I think having that passion is super important. And I think you're starting to see more and more of that as people
Definitely.
come along. I think the GameStops, even, how irrational kind of move like that is for a stock like that, you really see there's a lot of passionate people behind it.
But also because of GameStop, there might be some individual right now that never pay attention to the stock market that's like, hey, I'm going to look and understand what's happening here. And maybe that spurs him or her to start to like stocks. Like I'm just saying, like it's like anything else. I think it has to be like passion. And also it's such a unique time that we're going through now in terms of, semi-lockdowns and pandemic.
Yeah.
Where I think people maybe have some time maybe they didn't have before, where they could kind of look in the mirror and be like, is this something I want to do? Do I want to do something different?
Correct. That's great insight right there. And quickly, Dan, I know we're getting against it here. Earnings coming up. We have, obviously, tomorrow's a huge day with Apple, Tesla, I believe Facebook. What quickly do you expect out of these tech earnings coming up here this week or this weekend, next week?
They're going to be jaw dropper tech earnings. I think it's like what we see on Microsoft across the board. I think robust numbers. I think it's going to be more fuel in the rally for tech stocks that we're going to see this week, going into next week. And, I think it's going to show that the party is still midway through in terms of tech, secular growth stories. And I think that's really going to be the theme that we're going to see playing out as these stocks continue to re-rate higher.
Well, you heard it here from Dan. We're getting into that tech earnings this week. Look for them to be pretty good. And so with that, Dan, the listeners, myself, we want to thank you for taking the time here. I know you're on the East Coast out in New York. It's a little late right now, but really want to thank you for taking the time, and hopefully we'll have you on here again in the next coming months.
Thanks for having me. And hope everyone's good.
For sure. All right, Dan. Well, we will speak with you soon, and thanks again.
You. All right. Take care.